Okay, so today we're here to talk about how Chase CEO Jamie Dimon ended up selling off $150 million of shares, the first ever time he's sold any shares since he's been there in almost 2 decades. Now, it wasn't just him at Chase that did the same thing. As you can see here, other JP Morgan insiders also sold shares on Thursday per MarketWatch, with Troy Robaugh, the co-CEO of JP Morgan's commercial and investment bank, sold 13.7 million worth of shares, and also Stacy Friedman offloaded 1.1 million, and Chief Information Officer Lori Beer sold $716,000 worth of stock. Now, all of that was in February, but more recently, Jamie Dimon sold some 32 million more of JP Morgan Chase stock on Monday, concluding the bank chief's plans to sell 1 million shares this year. So with that sale, he totaled about $180 million. So today we're going to talk about what these sales of stocks at Chase indicate, also the warning that Jamie Dimon gave, as well as how all of this can affect you and your business. Now listen, if you're a small business owner and you're trying to get funds to grow your business, get more employees, get some more inventory, do some advertising, whatever it is that you need to grow your business, you can actually get on a free call with me one-on-one where we can go over your options to get 0% funding. That's right, 0% interest from as little as 50K to 100K and beyond, just based off your situation. But if you want to see how we can help you qualify for that, go down to the description below and book a call with me, or go to the link that you see on the screen, electbizfunding.com/get funding. Again, that's electbizfunding.com/get funding, and get funding for your business in as little as 30 days. Okay, now back to the story and what's so scary about what just happened with these CEOs and leaders at Chase selling off so much stock. If you guys are familiar with SVB, Silicon Valley Bank, and I know a lot of you guys are because I received an email to tell me about, if I had money at the bank, that it was failing. And I think I got a text message too. And I've seen quite a few people get the same message saying that, if you were tied up with funds at Silicon Valley Bank, then you might be in for some trouble because the bank just went under. So basically, you can see here that SVB execs sold millions of their company stock in lead up to collapse, federal disclosure show. And that's very true. As you can see here, less than 2 weeks before Silicon Valley Bank became the largest bank failure since the 2008 financial crisis. That says a lot that bank went under in the way that it did, because it was performing very, very well, just as Chase is to this day. And you can see here, top execs at the company sold stock totaling several $1 million, according to federal disclosures obtained by ABC News. You can see here, former president and CEO Greg Becker sold over 3.5 million of his company stock holdings on February 27th. And it wasn't just him. CFO Daniel Beck sold $575,000 in company common stocks on February 27th as well. And it's not hard to see why that would be a scary thing. If you are the leader of a company, that means that you pretty much have more insider information on what's going on inside that company, as well as what's going on in the industry. So you clearly have an idea of what's happening. And we can see that just as recently as last year, these two CEOs, the CEO and the CFO, they had, whatever information they had, and they ended up selling off a lot of their stock before it was actually about to fail. Now, of course, this brings to mind, why did Jamie Dimon sell all of that stock in Chase, especially after they just came off of a great quarter? And according to what he said, it is for financial diversification and tax planning purposes. And he continues to believe in the company's prospects are very strong. So now that's what he said. But if there was some other things going on, I'm kind of, skeptical that he would have, just came out and say that, because while he is still the CEO, if he does, too large of a transaction or too many transactions, or if he does anything to indicate that something might be wrong, then of course it would lead to, massive stock failures, people pulling money out, all of the crazy stuff that happens. Now, I will say that he did not, that was a lot of money in stocks, but he actually only let go of about 10% of his what he's vested in Chase as far as stocks go. So that's not the large majority of the money that he had in there, but it is still worth noting that he did still give a warning recently as well. And this is actually just a recent warning. It's another warning that he gave just not too long ago, maybe over a year ago. But before we get into that, let's speculate a little bit more about what it is that might be the reasons that he could have actually wanted to sell so much stock. Now, one could be that he's thinking about a or seeing information that's telling him that there is a possible, big upcoming economic recession that might be bigger than what we've seen before, which is something that we've heard from other people. And, he could be trying to just pull money out so that he has some capital ready to invest in all of the things that's going to be on sale. Because, when there's a economic recession, those who have their money together and in a good place, they actually get to go buy some of the things that are now on sale, like properties, stocks that have dropped, all of those things. But, that could be one of the reasons why. Now, another reason could be that he's seeing some internal things that are letting him know that the stock price at Chase right now is at a peak because of the great growth that they've had. They've had to take on assets from other banks that have failed recently. So they have actually seen growth in some of their numbers. And of course, Jamie has done a great job in managing Chase. So he has helped the company to grow over the time that he's been there. He was even there during the first economic recession in 2008, not the first, but the one in 2008. And he helped, ride them through that and participated in making things work out and still profitable for them. But it could be that, they're inflated right now because of everything that is happening and going on. And he sees the stock price at a really good price. So he's selling while it is at a good price. And maybe he also sees some internal information that is telling him that Chase might do the exact same thing that Silicon Valley Bank did after it was doing really good and performing really well, and then ended up failing unexpectedly to a lot of people. Now, with Chase being one of those bigger, tier one banks that has a lot of money and assets, it seems like that's something that should not happen. But, in the times that we're in today, you kind of don't know how things might go. And now that leads me to his warning. Let's take a look at that. You can see here, Jamie Dimon says chance of bad economy is higher than other people think. You can see here, he warned investors that trouble could lie ahead. Many economic indicators continue to be favorable. However, looking ahead, we remain alert to a number of significant uncertain forces, he wrote in a press release on Friday. He cited geopolitical tensions and persistent inflationary pressures, which may likely continue as ongoing worries. We do not know how these factors will play out, but we must prepare the firm for a wide range of potential environments to ensure that we can consistently be there for our clients, he said. Something else that he mentioned was even if we go into a recession, they're in pretty good shape, he noted, but he also said that lower income earners are quickly running out of extra money. The bank is beginning to see some cracks in the subprime auto market. Now, also, while calling in from an investment banking conference in Florida, he told reporters he believes that market pricing is likely too happy right now, and the chance of a bad outcome is higher than other people think. Now, in another article, he also says, don't be surprised if the economy hits a wall. Now, again, keep in mind that his company has been doing well. It's the biggest bank in the U.S., top lender, and basically they had a great quarter. They're coming off a great quarter, and he's still looking at the economy and things to go forward like this. And again, a person that's already been through an economic recession and came out on top, this is how he's viewing things to come. Now, in a letter that he wrote, his annual letter to the shareholders, he stated that JP Morgan is prepared for a very broad range of interest rates from 2% to 8% or even more, paired with an equally wide range of economic outcomes, he wrote. Now, he is expecting that the interest rate could get as high as 8% or even more. Even though we're all sitting around waiting for rate cuts, this is what he's thinking that we might see. Now, you can see the article also says that inflation popped up in March with the consumer price index rising to 3.5%, continuing an upward trend that has started 2024 on the wrong foot for the Fed. Now, these readings have cast further doubt on whether the central bank will cut rates by the summer or even at all as previously expected. So again, a lot of us are out there waiting for those rate cuts, but because of how things are looking as far as inflation, and I mentioned before how Jerome Powell was thinking, he wants to look at the market very, very closely before they decide to, move rates at all. It's based off of what Diamond is saying. It's not looking as though things are going to actually go down as far as rates, which is why he's anticipating that it could go to 8% or even higher. And you can look here and see that even Federal Reserve Bank of Minneapolis President Neil, hopefully I'm saying that right, said last week that the central bank may not cut interest rates at all in 2024 if inflation remains stubbornly high. Now, listen, if you've been getting value from this information so far, then please go ahead and hit that like button so YouTube can show this video to more people that need to hear this information to start getting their businesses prepared and just to know how to move going forward in this coming economy and right now. And subscribe to the channel so you can get more information like this. But look, you need to know all of this might affect your business so that you can plan accordingly, right? So when it comes to the things that are going on, the inflation, the possible bank failures, a big bank like Chase actually failing, and what that would cause and what that would mean, because a lot of people are looking for the regional banks to fail first. And while that might also happen, it's a lot of things that could change and happen and go wrong. With the big, recession being the totality of all of these things coming together and having a negative effect on you and your business and how we conduct ourselves in business. So what can this do to affect your business? Basically, anytime the economy goes down, of course, that's going to mean less jobs. Of course, if you run a small business and you were looking to hire people, you might not be hiring people. If you are a big company or a small company and you have people that you have to pay, but you don't have that much money coming in from clients, you might have to let go of those people. And if some of those people that get let go of a job are your customers, then well, that means that your customer base now no longer has the income that they need to come and pay you, which causes there to be tightness or a drop in revenue and sales for you and your company. And then of course your expenses are still going to be there. Whatever services you pay for your business, your rent, any expenses that you regularly have that you have to spend on your business, those things are still going to be there while you have less revenue coming in and while your customers' pockets are getting tighter until everything gets better, right? So what you would have to do in order to survive as a business owner is going to be having some capital on hand that you can actually use while revenue is down. Or, let's say you do all that you can now while things are good so that you can actually build up some reserves in cash, and then you can actually have money for a storm in case, the storm does come, which at this point is looking like a when it's going to come and not a if it's going to come. But basically, you want to have as much cash reserves on hand as you can. And if you are somebody that's trying to grow your business and get it to a better place, right now would definitely be a great time to have some extra capital on hand because if you get that through funding or however you get it, extra capital can help you grow faster, exponentially faster than you just trying to save up cash. And, even if you use capital for marketing and advertising or to get more inventory so that you can make more sales, anything that you can do to generate more sales now while things are cool and things are okay is going to be what you want to do to make sure that you're preparing for anything that might come later on down the line. So getting that capital now and getting the assets that you need, inventory, advertising, whatever you need to grow your business and get more cash coming in, do that now while things are good. And also, let's say if you had a line of credit or a credit card for your business, that's different from a loan because you don't have to immediately start paying that back. That means that you have access to cash that you might need to pay your business bills just in case you don't have revenue coming in and the bills are still there. You can have, a credit card, and credit cards on the business end are usually a lot higher in amount versus what you see on the personal side. It could be 10,000, 20,000, 40,000, 50,000, all on one credit card, even 70,000 on the business end. So having something like that on hand that you can go to and keep your bills flowing until things get better or until you can generate some more sales, then that's going to be something that can help you greatly and keep your business surviving while you are trying to wait for things to clear up in a recession or just get your business to a point where it can still stay sustainable and keep bringing in money. All of these things are ways that you can be effective in business. And that's why, getting access to capital is something that I can help you guys with if you don't really know where to go, if you don't really know the things that you need to do to structure your business properly to get access to funding, because there are different ways you can do that to actually increase your chances of getting funding in your business and get more funding, especially like the 0% interest I was telling you about. So again, if you want to help with that, try to book a call. But look, when you are looking at everything that is going on in the economy, and you know that you have your business that you started for some reason and you want that business to grow and thrive so that you can, whether it's retiring your mom, whether it's, making sure that you can spend more time with your family versus, working at a 9 to 5, whatever your reasons are, you need your business to continue to grow and thrive. And what we've talked about so far is giving you the information that you need to know how to operate and move as a business owner in these, uncertain times that we're in right now. But all of this information is going to be totally useless if you don't actually go and get some funding before things change, before the lenders start tightening up their credit requirements, and then it's harder to get funding later, or nobody is available to even pay you, or opportunity comes up for you to get a big deal and you don't have the inventory you need, you don't have the manpower that you need, and you don't have the capital to afford any of that. You need to get all that stuff in place before all of these things that we are looking at now comes into play. So basically, what you need to do is, if you need to get funding options to apply to that are easy to get funding options, I'm going to send you to those over here. And if you need to fix your credit to actually try to qualify for funding, because if you fix your personal credit, you can get funding a lot faster than you can trying to build business credit. I'm going to send you to a video here, which will lead you to a series that I did, which will take you through every step that you need to go through in order to rebuild and fix your credit. Now, I'll see you guys in the next video.